Australia's GDP numbers for the December quarter will be released any second now by the ABS. Let's go live to our business reporter, Ed Boyd. Ed, there's a chance economic growth could go backwards in the fourth quarter. That was certainly something that the Westpac chief economist was warning about, among others.
Yes, Lucy Ellis, the chief economist at Westpac, was warning there's a possibility that GDP growth in the fourth quarter, so the last 3 months of last year, could potentially have been negative. Now, she's expecting growth to be 0%. The market is expecting an increase of 0.2% quarter-on-quarter growth. The other prediction is for the annual growth rate during the calendar year 2023, that's expected to be 1.5%. So the numbers are just coming through now. We've got the fourth quarter growth as expected at 0.2% quarter on quarter. This is just coming through from Reuters. And the actual full year growth is 1.5%. So today's figures have come in as anticipated by the markets. They've come in bang on target. But it's worth flagging here, Kieran, that if the growth rate had come in at 1.4%, then it would have been the lowest level of economic growth in Australia outside of the pandemic since the year 2000. So it's only 0.1% above that. So looking at the figures overall, it is still pretty weak level of economic growth, because you think about the December quarter, household consumption, consumer spending is the number one thing that holds up economic growth in Australia. And we know with the 13 interest rate rises that the Reserve Bank has hit our economy with, consumers are tightening up. And we're seeing that flow through into the GDP figures. So numbers today up by 0.2%. Quarterly, up by 1.5% at an annual rate. The ABS say growth was steady in December, but it slowed across each quarter of 2023. So obviously, growth at the start of the year was better than the end of the year. Government spending and private business investment were the main drivers of growth this quarter. Now, the other thing we've noticed as well over the last couple of years has been household spending being subdued. And the ABS say in the December quarter, it only rose by 0.1%, with increases just across the essential spending categories, things like electricity, rent, food, and health. The other thing we've also noticed has been the household savings ratio has been dipping strongly since the pandemic. Remember, during 2020, 2021, households saved a lot of money. They were at home, they weren't going out. They've been dipping into those savings, and that has continued as well in the December quarter of 2023.
And Ed, how does the Reserve Bank then react to today's figures? The next cash rate decision is on the 19th of March.
That's not too far away. So the Reserve Bank's recent statement of monetary policy, their economic forecast that they put out each quarter, they have economic growth for last year at 1.5%. So the figures have come in exactly as the RBA has anticipated. So they'll be pleased to see today's numbers. We've had the market pricing in several cash rate cuts from September this year. So from September is when the market's expecting the RBA to begin cutting rates. And with today's figures coming in as anticipated, I'd say the market's not going to change their views at all. But if the figures had come in as a negative growth figure for the December quarter, then it would have potentially encouraged the RBA to potentially start cutting interest rates a little bit earlier in the year to stimulate the economy and get its growth back up and running again. But 0.2% growth in the December quarter is still pretty weak. It's not very strong. And as the ABS says, the quarterly growth weakened throughout the calendar year 2023, finishing at just 0.2%.